Sudeep, some of the markers at least seem to be reversing. Afternoon, firstly. Crude is on our side, and now RBI also is pumping in a whole lot of liquidity in the system. Do you think that's enough to turn around the markets?
Well, it may not be enough in the long term, but I think short-term market is very much excited. Also, you must remember that a lot of good things are happening in Europe. Their debt ceiling, which they had imposed on themselves, they are agreeing to breach that. So is specifically Germany. And I think incremental liquidity, incremental economic activity in Europe is good for countries like India. Dollar index is also coming down. You mentioned crude is already down. I think these are good indicators as far as India is concerned. But we have to be careful. FII selling hasn't yet probably abated. And we have to keep a strong watch on that. Look, FIIs have been holding mostly IT and BFSI stocks. These were the two favorite sectors. And the recovery isn't that sharp in IT and BFSI yet. So obviously the selling by FIIs is probably still on in those two pockets. A lot of other segments have picked up quite a bit, but not IT and BFSI.
So the other sectors might have peaked, but not IT and BFSI is the take coming in from Sudeep. But we have been speaking to Global Voices, and today we spoke with Vivek Paula, who is the head of portfolio research at BlackRock Investment Institute, and he believes that the structure of the opportunities is sizable in India. He also says that for someone with 5 to 10-year horizon, now is the time to build your portfolio in India. Let's go across and listen into him.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future. Right, if you were to look at current price earnings multiples and compare them to the past, it's not obvious that it's cheap by any measure, right? And people have been talking about that being expensive. But actually, if you think about things in a slightly different way, if you think about the risk premium associated with Indian stocks, I would argue that's not particularly expensive in a historical context. And the reason why I get a different answer for that story than the other one in terms of price earnings metrics is taking into account future earnings growth, taking into account the future path of rates being different from the past. I actually would argue that on a long run basis, particularly in large caps now, it is not the case that Indian equity are particularly expensive. And that's part of the story for us as to why we think on a structural horizon there's an opportunity. The valuation story that I would argue is actually still, I don't think it's as expensive in Indian equity for India over when I take a broader kind of lens and look at the risk premium dynamics.
Okay, that's the view coming in from the house of Goldman Sachs. BlackRock Investment, I beg your pardon. Vivek Paul speaking with us exclusively earlier this morning. But Sudeep, the consensus call on the street, and especially more so after the RBI's measures to inject liquidity in the system, seems to be buy banks, buy financials, and stick with the larger cap ones, to be on the safe side. Is that your thought as well?
Oh, absolutely. I've been recommending that for quite some time, and I'll continue to mention that. I think, beyond the RBI liquidity injection and other positive developments, the banks were really attractively valued. Post this correction, some of the larger banks, particularly SBI, was looking very good, and somebody willing to build a long-term portfolio, SBI was definitely a good buy and continues to remain such. Apart from that, I think, some of the down and out banks, which took a hit because of multiple reasons, particularly asset quality issues on the microfinance book. I think the time is coming for having a look at them. IndusInd Bank is, for that matter, one bank which I will definitely recommend from a little aggressive investors' point of view. I think we have seen the worst, and things should improve from here on. So it's a good time to start buying into IndusInd Bank as well.